Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in today's free video I wanted to revisit an idea in MOMO because I shared this yesterday, and one of the most important things that I think you can find help with in trading is to find an idea and say, okay, at which point do you consider yourself wrong, and do you take the trade idea off? So yesterday when we were looking at MOMO, one of the first things that I liked about it is that we had a weekly squeeze, or a weekly chart, that was trading above the 10 and 34, and it closed back above the 10, which is something that I like to use for a weekly buy-side setup. So that had started to form, and I do like the idea of trying to enter within a little bit of an edge too, before it makes the move. So that was the first part that I was looking to for a bullish signal. Then you come into the daily chart, where we were able to close back up above the 50 and the 21, and we had a squeeze. So that all looked good. Of course, today for the move in the markets, MOMO took a pretty heavy hit, and now the thing that I have to watch is the retracement of this move. So it's to say, okay, that was all looking okay, but with this drop back, how do we act in relationship to the 618 of this move? You can see that retracement area is 36.92 and the low was 36.97. So if this area holds on tomorrow, I think MOMO will still have opportunity. If it instead breaks, then I would step back and see if it comes bound to test these broader moving averages. So that's an update on MOMO. And then one place to look at a little bit more of a delta neutral trade, because in these markets, I think, or any market that for that matter, having a delta neutral trade is usually a good way of trying to give yourself some positive theta. And I like the way Goldman Sachs has been hovering around 220. Now this is not something I would consider to be a bullish chart, but I don't really see it as being especially bearish either. And with us hovering right near the strike price of 220, I like the idea of going out into next week's expiration. And then it's essentially an iron condor where you join the body strikes. I prefer to do these a little bit wider with a smaller contract size to get closer to the idea of doing something like a short 220 straddle. You can see at almost a $5 credit, you're getting almost a 1-to-1 risk-reward ratio, and trying to capture half that credit into next week is another trade that I'll be looking at into next Friday. So I hope that's helpful. You guys have a great rest of your evening, and we'll see you at the next free video.